Who would win? Some colourful tulips or the Dutch economy? What is happening, investors? It is your boy Jack, and today we're going to be doing something a little bit different. We're going to go back in time all the way to the 1600s to speak about the Dutch tulip bulb market. This was pretty much the first ever huge stock market crash, my friends. Now, the reason I want to make this video is because a lot of growth stocks are going very poorly right now, and I wanted to make a video speaking about that, and I wanted to make a video specifically speaking about, when to take profits and when to not, when to hold through the tough times. I believe this is a lot more important to do right now as opposed to just covering individual stocks. I mean, we all know how to do that. But I think every now and again, you need to give your mindset a little bit of an update, and you need to remember why you are an investor. And sometimes looking back at history is the easiest way to go about doing those things. Myself, personally, I've been looking at my portfolio and I'm wondering, should I be selling out of certain positions right now? And that's a difficult question to ask yourself because, when you bought these companies, you really did believe in them. You really believed, you had long-term conviction, and now things get tough. You have to ask yourself, should you be selling? So it may sound a little bit weird that today we're going to be speaking about tulips, but trust me, it will all make sense towards the end, and hopefully it will at least be thought-provoking to all of you guys. It'll let you look at your portfolio, you look at your own conviction rates, and ultimately fill you with more confidence in your own portfolios going forwards. So my friends, right before we do get into today's video and we speak about a lot of tulips and the worldwide economy, can I please ask you to hit that juicy like button? I really would appreciate it. I want to say thank you from the bottom of my heart in regards to all of the support I've received on the last video, the comeback video. You guys mean the world to me. You guys really gave me a boost. I'd like you guys to drop me a comment down below. I'm very interested. What have you guys been doing over the last few weeks? Have you been buying more? Have you been trimming positions? Have you just been researching the same stocks? And please, my friend, if you aren't even new around here, hit that juicy red subscribe button and join the family of investors, baby. Also, if you are interested in joining my private Discord group, that's the first link in the description. As of today, I'm going to be a lot more active in there once more. Hopefully, we're going to be picking up some deals relatively soon. Join a large community of investors, talk about stocks all day, every day. It is juicy. And if you'd like 2 free stocks on Webull, that's the second link in the description, my friends. You got to sign up and deposit $100. Get yourself some free money. Help some of the bleeding. So Investopedia has this here, okay? And it's a very long one. And we're going to go through the majority of this. But let's just start it off here. A history of market crashes and how they recovered. It gives us a very basic understanding. The tulip craze, 1637. So what happened? In 1593, tulips were introduced in the Netherlands and became popular, okay? After contracting some virus that started giving their petals a multicolor effect, tulips became widely sought after in the country, and Dutch people wanted to spend a fortune to own the plant. Some would even trade their life savings or land to lay their hands on the exotic bulbs. Some of these tulips were going for more than 10 times a person's average salary, more than mansions cost in prime real estate locations at the time. That's how expensive things got. And what this all boils down to at the end of the day is, keeping up with the neighbors. As Gary Vee would say, keeping up with the Johnsons, they have a tulip. I want a better tulip. And there is also definitely an aspect of supply and demand here. There's a finite amount of tulips out there. If everybody wants one, the prices are going to go up. So because of this happening, okay, the price of tulips skyrocketed, forming an economic bubble ready to burst at any time. Now, this is what we really have to take note of when it comes to the stock market, okay? The price of tulips were so inflated that it reached a point where no one could really afford it, which triggered a sell-off. And this is what we see happen with stocks on a micro scale constantly. This is why stocks often go up and down, because they're perceived to be over or undervalued. If a stock is trading at too much of a premium, if there does not appear to be much room for growth in the short term at the very least, that is often when we will see considerable pullbacks. And I believe that is what we have seen as of late. The large majority of people probably know that, the lot of stocks out there were very overvalued for a considerable period of time. And as a result, a lot of them have sold off. Now, this may be why growth stocks and NASDAQ have been underperforming. It's those kind of industries that were so overinflated. You look at the S&P, you look at the Dow, they haven't really been doing as much. Keep in mind the year we're in, a lot of new investors got involved, myself included, over the last, let's say 6 to 18 months. A lot of us are younger guys, and what are we interested in? We're interested in growth. We have risk tolerance. We have lots of years to make money. We're not too interested in the indexes. We might have some money in there, but a lot of our money goes on these, higher risk plays because we can afford to lose. But what happens when things get so inflated where people can't really afford it, or in the case of the stock market, aren't willing to pay for it? It comes down, and the people who are holding them sell them to make their money back. But we can go all the way back to the late 1500s and see, you know, the same thing moving the markets as are today. And this is also why we are right now, you know, seeing some serious rotations inside of the markets. I mean, I'm not a big crypto guy, but it's clear to see that major coins and altcoins are all performing absolutely incredibly. And then you look at the stock market, and the majority of it's still doing relatively poorly. Even the more speculative players and the penny stocks, etc., which were so easy to make money in only 4 or 5 months ago, aren't the same right now. And that's why I've not been trading any of them. And that's all well and good, especially if you are a coin guy. If you know that market, you're in a great position right now. But I'm not, sadly. How did the markets recover? Tulip holders sought help from the government, but none of their measures were successful, okay? I mean, guys, history repeats itself. The storm ended up passing without causing any devastating damage to the Dutch economy, but more importantly, people started learning about the dangers of herd mentality in the financial world. And again, I haven't been around in the market for a long time, but I am guessing that, you know, this is a much bigger thing now than it was 10, 20 years ago. With the likes of, you know, people on YouTube being so popular, now there's hedge fund managers who people really look up to. Look at Cathy Wood, look at ARK Invest and their ETFs. People love hearing from them every day, and people will pretty much buy whatever they buy. I mean, you see a lot of these small altcoins trending, and it's because, you know, one guy tells the next guy, they see it's going up so much, and it is that herd mentality, and at the end of it, it usually comes down. But I just thought that it was very interesting that we could go all the way back to the late 1500s to the, you know, early to mid 1600s and still see, you know, the same trends in the overall world. This was called Tulip Mania, okay, and it serves as a parable for the pitfalls that excessive greed and speculation can lead to. And again, especially coming from the eyes of somebody who's in growth and spec stocks, it stands true. You know, nowadays people say stonks only go up. Well, back then it was, you know, tulips only go up. And everybody thought, you know, tulips to the moon, baby. That's what people were saying. But ultimately, the tulips didn't always go to the moon. A lot of people are probably aware that Warren Buffett has a greed indicator, so to say. February 15, 2021, it was at an all-time high. Now, this is how the market works. And now we need to get back to the whole point I'm trying to make in this video, is that this is all part of the game. Most of the time, okay, things that go up very quickly will come down very quickly. But if they are, at the end of the day, good, solid, long-term investments in companies that we do expect to do well over a prolonged period of time, companies that we still expect to be here and thriving in the next 2 to 15 plus years, they're going to, you know, come out on the better side of it in the end ultimately. But sometimes with things like tulips, you know, it can genuinely just be hype. And we do see that in the stock market as well, especially with a lot of penny stocks. Some of them do really well for a while, but ultimately come crashing down to the ground. And now one more thing I want to point out, okay, is, you know, stock guys did get in on the action with these tulips. People began buying tulips with leverage. They used margin derivative contracts to buy more than they could afford, okay? Have we seen that much over the last 12 months? Yes. Has it worked out for some people? Yes. Has it burned some people to the ground? Yes. A large part of the rapid decline in the tulips, okay, was the fact that people had purchased these bulbs on credit, hoping to repay their loans when they sold their bulbs for a profit. But once the prices started to decline, holders were forced to liquidate and to sell their bulbs at any price to declare bankruptcy in the process. Now look, there's been many more market crashes since then, okay? Some very big ones, some very small ones, okay? But they all share some sort of similarities. A lot of the time, greed is very, very heavily involved. And there's obviously the very famous quote from Warren Buffett yet again: be fearful when others are greedy, and be greedy when others are fearful. So the question is, as of yet, are people fearful or are people still being greedy? I think it's difficult to say, and I think it changes very, very much so from one asset to the next, or even from one sector in the stock market to the next. Look at the world of growth stocks right now. A lot of people look to be fearful. I mean, people keep selling and selling and selling. There is genuinely a lot of fear in the air. Look at the S&P and stuff. There's a little bit of fear there too. Go over to Bitcoin, go over to these altcoins. Not much fear, an awful lot of greed. How long is it going to last? What it all really comes down to at the end of the day, in my opinion, is we have to understand this is part of the normal cycle of the markets. There is always going to be periods, you know, where people get too greedy or people get too fearful, and that's where you can take advantage. I don't think anybody can accurately time exactly when these are going to be. If they could, they would be the single best investor in the world. There would be no need for anybody else to ever even, you know, have a word in on stocks, because this person would make more money than anybody. But what you can do is use certain indicators. You can look up to some of the guys who have been in the game for a very long time. We can look at the global trends. We can see how the economy is performing. We can see what the Fed's doing. all of these kinds of things. We can look at the bigger picture, not just look at the company, not just look at the stock chart, not just look at certain valuations, but look at the entire picture together. And I have spent a lot of time doing that over the last couple of weeks. In the process, stocks have still been going down. A lot of my favorite stocks have been going down, and there is a lot that I am very, very happy to go ahead and pick up right now. I will make a video on the top stocks that I'm looking at. I'll also make a video on, what I have lost the most in right now, because I'm down considerably from the peaks. But I think that should be quite valuable and should help you guys see, that us YouTubers are losing big right now as well. I mean, I'm losing terribly. It is what it is. That's why I've had to put so much research into things like this so that, I can be confident holding what I'm holding. But anyway, my friends, that is going to be it for today's video. I know it's a little bit different. I know we're not speaking about any individual stocks, but hopefully there has been some thought-provoking moments in this one, and you can go off and have a look at your portfolio and take something away from this video. If you are able to do that, and if you did enjoy the video, could I please ask you to hit that juicy like button, drop me that comment down below, and please, my friends, subscribe if you're new around here. All of that would mean the world to me. If you are interested in joining that private Discord group, again, my friends, that is the first link in the description. And if you want those free stocks on Webull, that's the second link. But if you watched all the way till the end, you, my friend, are a true legend. I hope you have an absolutely fantastic, blessed day. I'll see you in another video very soon. Peace.